Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, August 20th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, it was a pretty anticlimactic day today. She's down 0.27%, but at the start of the morning session, it looked like it was going to be one of those take him out behind the woodshed type of situation. We had a 65-point range today. She made a low of 632.95. But remember, what's important is how we close them. And she closed pretty damn strong. She had the makings of a woodshed day, spiking below the 20-period moving average, taking care of some unfinished business. Did not get to the other unfinished business that we had down below. We'll get into that in a moment. But she had every opportunity to go and get it done. But she decided that it wasn't time yet, and she rebounded pretty nicely. And what's important to take note is that she did manage to close above the 20-period moving average. And she did hit it today. So she spiked it. That's normal garden variety behavior. The 20-period moving average is home base, but she did close candles above it, reestablishing above all the moving averages. The trend is your friend. So obviously that's still the case. We have 2 more trading days this week, so we'll see how she wants to finish the week. But closing candles above the 20-period moving average is important. Let's go ahead and take a look at the hourly chart because it's always good to get different perspectives on the different time frames. And it's pretty obvious that we can see she did find support at the 200-period moving average. But not only did she find support at this area, but this happened to be the midpoint between no man's land and the unfinished business down below. The unfinished business is this gap that comes in at 632.30. The entrance to no man's land happened to be this low. That comes in at 633.74. So it was essentially a spike, touched the 200-period moving average, and then rally back in the other direction for a strong finish on the day. Generally speaking, the entrance to no man's land is a bull-bear battle. As you can see, that was the exact case. On the first hourly close, this candle right here, big time breakdown candle, she stopped right at the entrance to no man's land. And then she spiked it, found support, and then rallied back. Not to mention, she did find some overhead resistance towards the end of the day at this breakdown candle high, around 20% of the high. But again, we did have a strong finish on the day today. Closing above the 20-period moving average, the trend is still your friend, but just remember that anything can change with the snap of the fingers. There's still 2 days left of the trading week, so we'll see if we get some follow through. Closing candles below the 20-period moving average, she's going to want to complete the unfinished business that we just talked about and lower. Inside the numbers and live room members will have those numbers ready. Let me tell you guys, ever since we ran that promotion for the Lazy Swing Trader, it has been on freaking fire. Yesterday we had 3 profit target alerts, and today we had 3 profit target alerts. Let me tell you, there's nothing wrong with getting spammed with profit target alerts in your inbox. So today we had a final profit target in TXN. Entry price was at 182.85. As you could see, she spiked it by a touch, but pretty much a no heat trade. How do you like dem apples? What about MDLZ? Entry price 60.59, nailed the low. How you doing? And then second profit target today at 63.92. And as you could see, that profit target was absolutely nailed. The system picks up profit targets at areas where it's overhead resistance, where it's a necessary place to take profit. And as you could see, we had our profit target alert right in this area, and that was also overhead resistance. So in conclusion, that's a pretty nice exit. How does she know? We'll give that one a funny how that works. Last one, we got Accenture, entry price 242.75, and today she hit her first profit target, locking in a 4.65% gain and a risk-free emotionless trade. Again, right here, exit number 1, pretty much nailed it. It's always good to be in a risk-free emotionless position. That's the Lazy Swing Trader Automagical Algo system. Not to mention, if you click the link in the description below, you can get the next swing trade completely free. No credit card, no subscription. It takes literally 5 seconds. The swing trade comes straight from our watch list. You'll get follow-up emails if it hits entry target. You'll get follow-up emails if it hits profit target. It's essentially a trial to see how the Lazy Swing Trader works in real time. The link is in the description below. Alright, let's go ahead and take a look at inside the numbers starting with the Zero Dark 30. And don't forget to leave a like and comment on the video as it helps the channel out a lot. That would 100% be greatly appreciated. Alright, so we could start with the morning pivot at 639.20. Now it wasn't necessarily a trade that was on the board, but that pivot is going to be important later. So this was definitely a tough trading day. Our first initial zone of support didn't work out. As I said before, it had the making of a woodshed day. So we had to do a little bit of catch-up work. The first zone was 637.95 to 636.25. All I'm going to say is she blew right on through. I don't really need to go over it on the chart. I just want to show you guys and show some level of transparency that we did have to do a little bit of catch-up work later on in the day. As she got to the second zone of support, things started to take a little bit of a turn. Look at this, starting to get below 636.25 will open the door to 633.80 and then the unfilled gap at 632.30. That's the next zone of support. That 632.30 was the unfinished business that we talked about earlier. Let's go take a look. All right, so right at the vertical line is today's activity. Pivot is in green. This is the first number, the front end of the support zone. And as you can see, she spiked it by a few cents and then ripped it right back up for a nice little trade. Again, we did have to do a little bit of catch-up work earlier. As you can see, she was just relentless the first hour of the morning. But what's important when we have these types of days is to manage our risk. It's risk management. If we don't manage our risk on these types of days, then we're the ones getting taken out behind the woodshed. So this number worked out pretty well. She almost made it to the unfinished business, got to the midpoint, couldn't quite get there. And then as stated in the notes, staying above 633.80, she'll want to make a run towards the first area of support that we had on the board from earlier. And she would use that as resistance on the way back up. That initial zone came in at 637.95 to 636.25. And then also mentioned in the notes that there was an intermediate midpoint number at 637.10. So we'll put those numbers up on the board, 637.10 and 637.95. And as you can see, she did use that as resistance on the way back up. Came up short the first time, spiked it by a little the second time, used it as resistance, and then take a look at this. 637.95 was the front end of the support zone. The high right here is 637.96. We'll give that a funny how that works. She spiked it by a penny, and then ripped it right back down in the other direction, using it as resistance on the way back up. And then remember how I mentioned that the pivot was going to be important later on? Look where we almost made it back to towards the end of the day, 639.20. She didn't quite make it, she didn't touch it, but that was a target. So we know that that pivot is important. A little bit of institutional participation at the end of the day, the last 5 minutes. She couldn't recapture the pivot. And then where'd she come right back down to? The 637.95. So although the first support zone didn't work out in our favor initially, that doesn't mean that these numbers aren't going to be important later on. And as you can see, that was exactly the case. Pause the video, read the notes, and go back to the chart to double check the work. It's all in here, the game plan, the numbers, everything that you need to be a successful trader. What about Camp IWM? She's down 0.35%. She almost made it down to the 20 period moving average, coming up short, screwing two factions of traders. Had a nice little rebound from that area, but that is the next destination if we continue to have some follow through. Is going to be now a spike of the 20 period moving average, possibly getting down to this big time breakup candle low. In that area, you also have some unfinished business. You got this unfilled gap right here that coincides with the 50 period moving average. If she doesn't want to get down to the 20 period moving average and is still going to be above all the moving averages, therefore the trend is your friend, the first destination up above is going to be the most recent breakdown candle high. That is going to be some initial overhead resistance. Also, just to build a little bit of a full stack, you got one breakdown candle high, two breakdown candle highs, and then you have a breakup candle low. So that is going to be some big time overhead resistance. You bet your bottom dollar that we'll have those numbers ready for Inside the Numbers and live room members. What do we got going on at the transportation department? She's down a whopping 1.89%, down 300 smackaroos. And look where she made her way to, the convergence of the 50 and 200 period moving average. She completed the unfinished business that we talked about yesterday, being this gap right here, spiked through it, wanting to head to the convergence of the moving averages. This was big time overhead resistance. You got 16,000, that's a big fat round number. That essentially came from this big time breakdown candle high. And now she's in the vicinity of testing some key areas, being the moving averages. Getting below these moving averages right here, we start to look for a leg lower. She did manage to close candles above it. Doesn't mean that we'll stay above it later on this week. Time will tell. But getting below, the first destination is going to be the breakup candle low, and that also is the midpoint between the convergence of the 50 and 200 period moving average and the last line of defense, the 100 period moving average. So that is going to be an important area. What about the Q people? She's down 0.59%, and if you were paying attention in the video last night, I gave you two numbers, 560.63 and 558.83. What was the low today? The low was 558.84. She came up a penny short. All I'm going to say is, funny how that works. I gave you those numbers last night. So unlike the spiders, we are closing candles below the 20 period moving average. So continuing to close candles below, that will open the door to the 50 period moving average, which we did come up short of. That will be the first destination. If we do manage to recapture the 20 period moving average, the first place that she's going to want to visit on the upside is the most recent breakdown candle high. But it is interesting information that we are below the 20 period moving average for the Qs, but we're still above the moving average for the spiders. We'll just keep that as a puzzle piece information for now. We still have 2 trading days left of the week. Anything can happen, but continuing to close candles below the 20 period moving average, she's going to want to head lower. All right, what about XLF, the financials? So unlike the other markets, she's actually up 0.5%. She continues to close candles above the 20 period moving average. The next destination that she's trying to get to on the upside is this big time breakdown candle high. And then you have these breakdown candles right here, and then you start to become at a stone's throw away from reaching new all-time highs. But getting below the 20 period moving average, the door will start to open to this breakup candle low that coincides with the 50 period moving average and then some unfinished business down below. That is going to be a key area contingent on if we close candles below the 20 period moving average. Nothing really new to talk about XLF. If there's nothing wrong with the financials, then it's highly unlikely that there's nothing wrong with the overall structure of the market. What we're experiencing right now in the spiders, IWM, the transportation department is just a little pullback in an uptrend. Nothing more, nothing less. Last but not least, we got my favorite SMH shaking my head, the semiconductors, Smash Mouth. She's down 0.66%. Looked like we were going to have one of those woodshed days. She managed to complete some unfinished business down below. She managed to get down to the 50 period moving average, spiked it by a touch, and then ripped it right back in the other direction. So that was a nice rebound from the 50 period moving average. The next course of action is trying to get above the 20 period moving average, going to recapture the most recent breakdown candle high, and then she's going to try to work on the all-time highs. But staying below the first line of defense being the 20 period moving average, she's in a slightly more bearish position. She'll want to go back for another test of the 50 period moving average. Nothing really left to talk about SMH, so that's going to wrap things up for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. Thank you all again for your continued love and support throughout all of this. It absolutely means the world to me. So with that said, we're going to pull the ripcord for today. We'll be back ready to go in uniform for tomorrow's morning session and the video later that night. Don't forget to leave a like, comment, subscribe, all that good stuff. There's the free swing trade if you want it in the description below. I hope everyone has a great rest of your day. Stay safe and take care now.